If you earn somewhere between £60,000 and £120,000 in the UK, there's a number that quietly controls how much tax you pay. It's called your adjusted net income. And if you understand how to reduce it, you can avoid some of the biggest financial traps in the UK system. Let me show you the top 5 most powerful ways to do it, starting with one most people should consider first. Number 1 is pension contributions. If you contribute through salary sacrifice, that money comes out of your gross salary before tax and national insurance. So if you're a higher rate taxpayer, every £1 into your pension might only cost you around 60p. But the bigger point is this: it reduces your adjusted net income. And that matters because certain thresholds are brutal. For example, once income goes over £100,000, you start losing your personal allowance, which creates the famous 60% effective tax band. And if you have children, crossing £100,000 can also mean losing 30 hours free childcare. So pensions aren't just retirement savings, they're also a tax planning lever. Number 2, our second lever, is salary sacrifice schemes. This can include things like EV car schemes, cycle to work, or even additional pension contributions. Because the cost comes out of your gross salary, you avoid income tax and national insurance on that portion. Our third option and lever is gift aid donations. When you donate to charity under gift aid, the donation effectively reduces your adjusted net income. So it can also help bring you back under important thresholds. Our fourth option and lever is trading losses or allowable deductions if you have a side income. If you run a small business or side hustle, certain legitimate losses can reduce your taxable income. And our fifth option and lever is making sure any pension contributions outside salary sacrifice are still counted properly when calculating your adjusted net income. Now, why does all of this matter so much? Because the UK tax system stacks rules on top of each other. Income tax, national insurance, child benefit taper, student loan repayments. And once those combine, the amount you keep from your next £1 can drop dramatically. So before you accept a pay rise, bonus, or overtime, it's worth understanding how these levers affect your adjusted net income. Because sometimes earning more doesn't mean keeping more. If you want, comment income and tell me roughly your salary band, and I'll show you what thresholds you should actually be watching out for. And if you want to take control of your pensions, see the pension bee link in my bio, or use the tax trap checker also available in my bio.